traders, and welcome to the Elliott wave analysis for this week, February 4th, 2019. We're starting a new month, we're starting a new week, and we are going to check these markets with a lot of energy because that's important in life. So this is the euro. The euro is getting ready to start the bearish move. After analyzing the chart, I found that this three-wave sequence that we are seeing here, A, B, and C, it's done, it's complete, and it's corrective. So we are going to look for a lower low below the previous low, below the end of the wave A. That's the 112.88. So that plan this week is to capture the trade to the downside to target the previous low. When we are using the Elliott wave analysis, we need to combine the Elliott wave count with other techniques to validate the top of the market. So if you like technical analysis, I'm sure that you are seeing a really important pattern here. And this pattern is the head and shoulders top formation. Here we have the left shoulder, the head, the right shoulder, and the other important part of the head and shoulders is the neckline. So connecting here the head and shoulders pattern, actually no, not from here, to here we got the neckline of the head and shoulders. So what we have here is, first of all, the breakout of the main trend line, then we have a pullback, then we have the breakout of the head and shoulders neckline. And in terms of Elliott, this is the wave 1 orange, wave 2 orange, and then we go again with 1, 2, here is another 1, 2, and here comes the wave 3, that is the strongest leg. So with all this information, now you can have a clear picture of our main forecast for this week. The Elliott wave count is the roadmap, is the GPS, and then you add your own technique, or you can learn the strategies with us as well. We have this fantastic wavy tunnel strategy that help us also to validate the trades. You can combine this with classical technical analysis, with chart patterns that are really powerful. But once you add the Elliott wave count to your trading, no matter what the strategy, no matter how you're trading the markets, trust me, this is gonna help you a lot. And you can add the analysis by taking our daily service, or taking one of our courses if you want to learn from scratch. So it's up to you. Some traders prefer just to receive the information, just to receive the analysis like this one every day in all the markets that we cover. But let's take another instrument. Let's take a look at another instrument, the S&P. The S&P on the weekly chart, this week is really important for the S&P, because on the weekly chart, last week, the price was able to reach our target area, our resistance, at this trend line. So last week, the S&P was able to hit the resistance, that is the trend line. And right there is rejecting this high, is rejecting the high, is starting to do something there. So let's say that you are bullish on the S&P, that you are thinking that the S&P is ready to go up to the previous high. That's possible. But the market is at a market extreme. It's at a resistance area. So the price this week could move a little bit higher, then reverse and start dropping. I think it's going to make a lower low. We don't know that yet. We need to see how the price is going to move down. But I think that for both scenarios, for a bullish and for a bearish, of course, we have to retrace, or we have to make a lower low. So all the focus this week should be at this resistance area, again, the price could move a little bit higher. On the daily chart, on the 4-hour chart, we can see more bullish perception, but at the end could just leave a long tail above the resistance or reverse. So this week, finally, we are there. We have been following the price for weeks, waiting to see the impact, waiting to see the price hitting that resistance area. So what we can do in lower time frames, I'm labeling this as a corrective wave. So here we have it. So what we can do inside on lower time frames is try to validate the reversal. So that's the mission this week. So far during the New York session, we just have sideways candles. That's weird because last Friday the employment data was pretty good and the S&P didn't make higher highs after the data. So if this one is going to be easy, if the price falls below 26.93, I'm using the CFD, so in case that you are using the E-mini or a different broker, I'm using Oanda for this feed, but in case that you're using something different, make sure to adjust the quotes to the price, because some brokers are going to show you the same chart, but with different quotes. So be careful with levels when I'm talking about this CFDs. 26.92 area, 26.90 will be the area to take the short trade to validate the S&P. If the price makes the higher high, of course, without moving below this low, then we just move a little bit more. The wave X could be that the scenario on the weekly chart where the S&P makes the failed breakout of the resistance area. So let's be careful there. If you are long, trail your stop in case that you have been trading the S&P from the previous lows, from the previous retracements back to the mean, then take your profits, because we are at the market extreme. Take partial profits, move your trailing stop, and if we have the breakout of this consolidation, it's likely to be the beginning of the new trend. So let's be ready. Don't forget that we are at a very important resistance area. If you like to receive this analysis every day, and not only on the S&P, on different markets, please visit ElliottWaveDesk.com, ElliottWaveDesk.com. Then hit the pricing page here on top, click there, and here you will find our plans and all the instruments that we cover on a daily basis. So please go there, take the first month here for $75 and $75 per month. After that, the regular price is $150. So this is a good deal to start your Elliott Wave experience with us. So I hope that you enjoyed this analysis. I'm sure that you are going to find the value on these comments, on these analysis during your trading this week, during taking your day trades, your scalps, or your swing trades. Elliott Wave works for every kind of trader. So thank you very much. I wish you a fantastic week with a lot of good trades. I'll see you in the next report, or if you join us right now, tomorrow you are going to start receiving the daily updates. Thank you. Take care. Bye-bye.